Good morning. Good morning, everyone, and welcome. My name is Margaret Myers. I direct what's called the Asia and Latin America program at the Inter-American Dialogue, and it's a great pleasure to welcome you to this online seminar. On behalf of the dialogue, this is a very timely event, Women, Financial Inclusion, and Family Remittances in Guatemala. As we know, family remittances across Latin America and Caribbean in general have become a critical source of income, and including for women. They are a source of economic growth and individual financial support, but can also be a catalyst for personal economic empowerment by encouraging savings and asset accumulation. This is a topic that is hugely complex, however, and deserving of far more attention to understand the impacts of these remittances, and especially prospects for ensuring women's economic empowerment as a result of these transfers. We are very fortunate to have an absolutely fantastic lineup today to examine these issues in some depth, and also to consider policies and other measures to advance progress and enduring challenges and vulnerabilities, looking specifically at the case of Guatemala. So it is with great pleasure that I turn the floor now to Manuel Orozco, the director of the Remittances and Development Program. And thank you again for joining us for this critical and timely event.
Good morning, everyone, and thank you very much, Margaret, for the introduction and the welcoming. We do have a great panel conversation on the issue of financial inclusion, remittances, and gender. We are joined with two very important colleagues, Mileydi Guilarte, who is the Deputy Assistant Administrator for USAID, Latin America and the Caribbean, and my colleague Betilde Muñoz, who is the Director of the Program on Social Inclusion at the Organization of American States. We have been working on remittances for nearly 3 decades, and at the Dialogue, we've been doing this work for 25 years, and a lot of the issues that we come across point out to sometimes important and significant issues. One of them is that remittances do have an effect on the economy of receiving countries, but also on households that receive it. And fundamentally, they increase personal income and disposable income to the extent to which they also have an effect on increasing savings. In Guatemala, we started on the ground doing field work on financial inclusion since 2006. And during that time, when we started, there were only 500,000 remittance recipient households. Now, by 2024, we're talking about 2.4 million households receiving remittances. That's practically 40% of Guatemalan households. The significance of the flow of money continues to be relevant. The study we produced and the findings we are sharing today provide important insights as to the extent to which the leveraging of these flows can actually increase inclusion, but especially among women. Since basically we've been doing this work, 2/3 of remittance recipients have been women, and that hasn't changed. But among the other things that haven't changed is the lack of financial inclusion, especially for women. So with that, I want to provide you with a small presentation, just offering you with some of the findings, and then have some questions to my colleagues to engage in the conversation. The study looked at particularly how remittances have an effect on women's financial inclusion and women's financial income. Fundamentally, what we find when we look at the economic and social characteristics of men and women of Mayan descent, is that 40% of women are economically vulnerable. When we look at vulnerability, we use the conventional metrics that are employed, particularly those who are above the median disposable income, those who own a savings accounts, and those who don't. and those who have savings above the median. And for the most part, women are most economically vulnerable. That means they only meet one of the three indicators. If we include insurance, the percentages is even lower because less than 20% of Guatemalans have access to some form of insurance. Another important finding is that homemakers and women of Mayan descent are the most vulnerable. They are the most economically disenfranchised, and yet, despite their economic vulnerability, they do have some form of savings. They have an ability to put money aside, no matter the amount, in order to basically have some use of the resource for some kind of emergency. But only 12% own a savings account. And this is perhaps the most important issue when it comes to remittance receiving, because 60% of women have a relative abroad and receive remittances. And that has an effect on increasing their economic empowerment. It increases their income 2 times. And because of that, we have been developing a series of development interventions, particularly providing financial advice, financial literacy. This is work we've done in over 16 countries worldwide. And in that process, in the strategy that we implement that you find in the report, it's a one-on-one financial advising strategy that provides information about financial services, but also provides important concepts and tips and tools to improve your budget management, to improve your savings capability, and to understand the importance of obtaining credit in the broader market access. And we developed that intervention, and basically among the findings, among the results of this work, 20%, 18% of women formalize their savings upon receiving financial advice. We work with, this year we have worked with 36,000 people. 2/3 of them are women. And we are able to basically reduce their financial vulnerabilities. The impact is substantive. And it does have important consequences, including with regard to the issue of migration. Statistically, those who formalize their savings are less likely to have an intention to migrate. These are some of the findings. My colleague Lucas shared the report with you and the presentation, so you can have some of the specifics of this data. But what is important is that definitely, whenever we looked at it, receiving remittances or not, women still have income that is typically below the country's median, the country's average. But when we provide the financial intervention, the financial advice, the impact is significant. We are able not only to increase the ability to formalize their savings, but also over time, they continue providing the resources of putting savings into their savings accounts. This issue, it's becoming more relevant because the problem of financial inclusion in Guatemala is deep, is dense, but also because migration is likely to reduce over time in the next few years, and so will decline the growth of remittances. That has important consequences when it comes to leveraging these flows for economic development. And this is particularly important because when we looked at the realities on the ground in Guatemala, access to credit, to use one indicator of financial access, is lower in rural areas than it is in other parts. 70% of credit in Guatemala, for example, goes fundamentally to the Department of Guatemala, to the capital, where only 20% of the population lives. And when we look at remittance recipients, 74% of Guatemalans receiving remittances are outside of the department, but they do have savings capability, they have a demand for financial services. So these type of interventions could help you deal with those issues. So this is just to put some context to this conversation. And I wanted to to start the discussion with you, with Mileydi and Betilde, starting with a very basic question. In your experience, how do you see developing opportunities, developing strategies, addressing the issue of inclusion at large, and particularly to what extent these issues of social inclusion and financial inclusion are subjects that should be strategically on the implementation context playing along together. So I'll start with Mileydi.
Thank you, Manuel. Y gracias, Margaret, también for inviting me here today. Muy buenos días a todas y a todos. So thank you for those questions. You posed some interesting questions to kick us off today. For the record, let me start off by saying that this topic is very personal for me, as during my early childhood, probably since I was about 10 years old, my family relied on remittances sent to Cuba from the US. And then when we migrated, we in turn supported more than 20 family members back in Cuba for almost a decade or more. So again, this topic is definitely strikes a personal chord for me. Now switching gears and putting my professional hat on and to answer your questions, at USAID, we have done significant work to promote inclusive economic growth in Guatemala and across the region. Part of that has involved work around remittances and financial inclusion, particularly for women. As many of you know, the root causes strategy is the Biden administration strategy for tackling the economic and social factors driving irregular migration from Central America. And two of the pillars of the strategy are central to our discussion today. Pillar one, for example, focuses on promoting broad-based inclusive economic growth, reducing inequality, and enhancing opportunities for vulnerable communities. Our programming under this pillar in particular emphasizes on creating quality jobs, fostering investment, and strengthening workforce development to address economic insecurity and promote long-term stability. The second pillar that I want to mention is Pillar 5, which focuses on addressing gender-based violence, which is a social ill that is often exacerbated where there are deep economic disparities. So how does USAID link these two very important areas of our work to get to your question on the intersection of social and financial inclusion for women? So one way we're doing this is, again, focusing on remittances. And as Manuel have stated, remittances can be a vital economic lifeline for countries and families that send migrants to work overseas. So just think of it. In 2023, just last year, Guatemala received nearly $20 billion in remittances, which is the equivalent of 20% of their GDP. That's a staggering amount. Guatemalan families rely on the added income for basic needs, food, housing, and healthcare, education fees for children to enroll in school. And for Guatemalan women who are homemakers, the added income in particular is significant because it allows them to better manage family finances. Importantly, an estimated 40% of remittances that are received go to indigenous population in Guatemala. And Manuel, as your study notes, indigenous women are the most vulnerable population in Guatemala, and they're often excluded from traditional financial systems. So USAID leverages the potential of remittances to enhance financial inclusion and support entrepreneurship, specifically for women and girls, to drive inclusive economic growth. Furthermore, we also know that only $4 of every $100 of remittances sent is invested productively. But studies show people could use a bit less for consumption. Maybe that applies to all of us. So USAID is working to get people to save and invest more. We do that through our rural financial inclusion activity in Guatemala, which seeks to improve access to finance in rural areas. This includes supporting women to plow more of their remittances into savings, which can lead to credit, as well as into their small businesses, family farm, home improvements, or education, or all of the above. So this creates the possibility to invest not only at the household level, but collectively at the community level, where women's involvement is critical to driving inclusive economic growth. To this end, at USAID, we're working with financial institutions to increase their awareness of the needs of remittances recipients and tailor products to this group, including innovations in digital financial services that enable women to access credit and savings more easily. We're also helping customers learn about financial products and services and incentivizing them to use financial services for productive investments with programs that enhance their financial literacy and decision-making power, especially in rural communities. So this initiative is already delivering results. This year alone, in 2003, the fiscal year, we trained more than 3,000 people on financial literacy, financial management, and use of digital platforms, resulting in more than 86% of the participants opening savings account. So I know at USAID, we talk about how many people we train and how many, sessions have attended, but I really want to note that it's just more than reaching, the 3,000 that I mentioned. But the real key point here is that those trainings totaled $8.5 million in saving. Take, for instance, Nelly, one of the participants, and a mother of two in Huehuetenango that participated in our project. She has used the financial tools that, through the trainings that we provided to manage her business, manage a budget, and actually saved more than 20% of her income. So this is very telling. This project also facilitated the disbursement of agricultural loans amounting to $720,000 in the departments of Quiche, Quetzaltenango, and San Marco. But clearly, we know that there's more to be done. Formalizing savings is just one step. We're also tackling the barriers that women-owned small and medium-sized businesses face in accessing conventional loans from banks, so that more women-owned businesses can access capital more quickly, allowing them to take advantage of new business opportunities and enjoy higher levels of income and really overall well-being. Partnerships with Guatemalan government, in Guatemala specifically, the good news is that financial inclusion is a shared priority with the Guatemalan government. And the government is also interested in facilitating avenues for migrants to invest their remittances back home. This is what we're excited, again, at USAID to work with the Arevalo administration to strengthen the digital financial services ecosystem to increase the speed and lower the cost of remittances delivery to the most remote and underserved areas of the country. Another key area where USAID supports remittances is through our H-2 visa work. And I'll tell you a little bit more about that because this has really been a pivotal work for us in Central America that has been supported through the Central America strategy. And I'll tell you the reason why it's so important. So in the context of migrant workers who travel to the US for temporary work under the US H-2 visa programs, relative to irregular migrants, the temporary workers send more remittances and are more likely to invest their remittances in productive activities and experience clear development benefits as their households have better food security and improved financial stability. So this really has become a win-win scenario where you have seasonal workers come to the US, hired by employers. This is not only something that USAID has been one of the interagencies involved in this effort, but we also work with the Department of Labor and many other government agencies here to ensure that this is a productive, responsible kind of contribution, not only to our economy, but also our partners in the region. And through this work, we've learned from our partners in El Salvador, Guatemala, and Honduras, the line ministries that we work with, that people who have participated in the H-2 visa programs are investing, again, in housing, business ventures, and paying off their debt. So this is a powerful evidence of the positive impacts remittances can have in temporary workers' home communities. And in Guatemala, for instance, USAID, along with our embassy colleagues, facilitated access to U.S. temporary work visas for more than 16,000 Guatemalans in the past year alone. And the rural financial inclusion activity that I mentioned earlier will place a special emphasis on working with this group. So in closing, I would like to definitely thank the dialogue, applaud Manuel for its report on women, remittances, and financial inclusion in Guatemala. The insights that you've shared are vital for shaping our programs and increasing our development impacts. So this is why it is incumbent on all of us, local communities, the international community, private sector entities, and the region's governments to create easier mechanisms and unlock incentives to help women and other workers abroad channel resources to improve the conditions for better social and economic development. Thank you. And I'll turn the floor back to you, Manuel.
Thank you, Mileydi. Betilde, welcome.
Thank you. Good morning, colleagues. Good morning, everyone joining us virtually. There was a lot of interest in this discussion, so I'm very, very happy to join you guys. And I especially want to thank the colleagues at the Inter-American Dialogue for the invitation, and Manuel Orozco. Besides thanking him for the invitation, I also want to recognize his leadership in the preparation of the report that we are discussing today. And I also appreciate the opportunity to speak to you about a topic that is central really to our mission at the OAS, promoting social inclusion as a catalyst for sustainable and equitable development for the region, but of course, looking at the case of Guatemala. As it's been already discussed, in examining the findings of the report on women, remittances, financial inclusion in Guatemala, I wanted to offer additional points of analysis and further work maybe through the lens of the mandate that we have at the Department of Social Inclusion and its implications for the broader goals. It's actually a pillar of work at the OAS of economic development, cross-cutting gender equity in the region. The report underscores the undeniable truth that women, particularly those in vulnerable and marginalized groups, face systemic barriers to achieving financial and social inclusion. But at the same time, it also portrays a picture of resilience and optimism among Guatemalan women who save despite limited means, who sustain their households too with remittances, and who aspire for better opportunities despite these enduring systemic inequities. So these findings definitely align with what we have long observed at the OAS, that inclusion is not just an ideal, but an imperative for regional stability and progress. At the OAS, we define inclusion broadly as both a principle of equity and a practice of participation. Our mandate is about creating a society where everyone, regardless of gender, ethnicity, geographical location, and so many other factors that are contained in our juridical instruments, have the resources and opportunities to thrive. Regarding the question that Manolo asks us, financial inclusion, as it is highlighted in the report, is definitely a cornerstone of this broader agenda of social inclusion. And we actually celebrate that the report adopted two underlying principles in the analysis that are crucial to our work. One, that inclusion must be intersectional. No? The report emphasizes the situation of Mayan women and homemakers, and this reflects a reality we see across the region, that women's financial inclusion often overlaps with cultural and social marginalization. And two, that access to financial tools enables independence, no? With this broader idea of gender, autonomies, financial autonomies that really end up being replicated in other realms of women's rights. So with this idea that when women gain control over their finances, they are also empowering or empowered to shape their futures, to make decisions, to influence their communities, reducing dependency and fostering stability at the community level, but this always has an impact at the broader level, national level. These themes reflect the initiatives we have promoted to bridge social and economic inclusion for vulnerable groups. At the Department of Social Inclusion, our approach emphasizes promoting equitable access to resources, opportunities, and decision-making power for historically marginalized groups. And we, of course, have women as a central component of our analysis and work, but this also includes indigenous peoples, Afro-descendants, persons with disabilities, and the like. And here I want to also mention that the basis of the creation of the department that I've been leading for 10 years comes from a meeting of ministers or General Assembly, as well as other types of meetings at the highest level, like the high-level meeting of authorities on social development that we organize, where countries have promoted the recognition that without financial autonomy, women cannot fully participate in societal decision-making, benefit from economic development programs, in the sense and aligning with the contents of the report, demonstrating that financial tools are not just mechanisms for wealth accumulation, but vehicles really for dignity and agency, and for empowering individuals and especially women to be active part of their communities. The challenges before us in bridging the gaps and advancing financial and social inclusion, especially for women in Guatemala, are complex, they're urgent, and it is important to say that these challenges are also the same faced by thousands of women throughout Latin America and the Caribbean. But at the same time, we also find and are encouraged by the data that the report provides to design policy and implement policy, because we believe that within these challenges, there are also opportunities that we cannot afford to overlook. First is the digital divide, which is something covered in the report. It's a stark reality that the report highlights. A critical challenge in achieving equitable financial inclusion is the interplay or the interconnection between technological, cultural, and social barriers. And this challenge of the digital gap for women, we see it in the report for Guatemalan women who disproportionately lack access to mobile technology and the internet, no? Just to add on this, that the gap not only restricts their ability to participate in the digital economy, but in a way also isolates them from the financial tools that we want to offer to transform their lives. So as concrete as a woman without a cell phone, for instance, cannot access mobile banking or digital payment systems that are fast becoming the backbone, the way to be financially included, and especially when it comes to remittances. For rural and indigenous women, this exclusion is compounded by cultural and linguistic barriers, making it even harder to bridge the gap. So these are all considerations that we need to take into account. We believe that they are not, this divide is not insurmountable. We believe there's a lot of talent, ideas, energy, resources, means to empower women through targeted digital literacy programs like those of the USAID, as well as the one led by Manolo and his team at the Dialogue, community-based training, partnerships with technology providers. So these are all elements that we need to take into account. Next is the informal economy, where many women work tirelessly without the protections or opportunities afforded by formal employment. Their contributions are without a doubt invaluable, but often remain invisible in the systems that count, right? Because of the very nature of it being informal. So in this regard, just to point out the importance of knowing that women face a double burden, inconsistent income alongside informal work that further limits their economic potential. The report also very well documents the lack of access to formal financial services that leaves women vulnerable to economic shocks, perpetuating cycles of of poverty. This is definitely a challenge we see across the Americas, but of course, particularly pronounced in Guatemala, as the report indicates, where women homemakers and agricultural workers face the brunt of these inequalities. And yet, we want to think that there's hope, that there's opportunity. For instance, by developing financial products tailored to the needs of informal workers, like microloans with flexible terms, for example, we can begin to unlock their potential and the opportunities that are there, lying there. And lastly, the role of remittances that Mileydi very well covered, and I also wanted to add a little bit on this. These lifelines sustain millions of families in Guatemala and in most countries of the region that are countries of origin for migration, doubling their household incomes for many women, as the report demonstrates. These financial flows, often sent by family members working abroad, provide women and their families with economic stability and opportunities that may otherwise be unattainable. Yet, as the report notes, the transformative power of remittances is often underutilized. Too often, remittances are spent rather than saved or invested, missing an opportunity to create lasting financial security. While these funds are lifelines, as I said, for daily survival for most families, and these women and a lot of families in Guatemala, they often fall short of building long-term financial security. Again, this includes the need for investing in financial literacy, but it's also an issue of the systemic support of creating an infrastructure, and in that regard, structural barriers such as weak financial infrastructure or limited employment opportunities constrain families from leveraging remittances for wealth creation. Here we had an experience at the OAS in the past, and where as I was preparing for this, we were thinking of this system, and that there was a model in the past where every remittance dollar sent is matched with a savings incentive or linked to an investment opportunity. Imagine the ripple effect something like this could create, not just for the recipient family, but for entire communities. So just to illustrate, this is the power of remittances when combined with intentional, inclusive financial policies. Mainly because remittances do play a crucial role in the lives of women, in the lives of families. They provide financial stability that ultimately helps them be rooted in their communities, thereby increasing displacement or migration. The fact that this financial support enables women to invest in local opportunities helps strengthen community ties and contributes to sustainable development at the local as well as the national level. The challenges are many, but the opportunities are greater, we believe. In this regard, we think barriers can turn into bridges. Exclusion, which is the norm, unfortunately, in the region, can turn into empowerment and potential into progress. And if I have 2 more minutes, I just wanted to conclude with some ideas of how we can make this transformation, and they relate to policy design on one hand and collaboration for innovation on the other, and here how all of the actors in the ecosystem can make a contribution. On the issue of policy design, and as the report very well concludes, empowering women financially is not just about tools and products, it's about knowledge, it's about the importance of financial education. In this regard, and as been already mentioned, we need to keep working on reaching women where they are, teaching them to budget, save, to invest in their futures, and this is especially critical for those who have never really interacted with formal financial institutions. So definitely the importance of investing in financial education as the cornerstone of economic empowerment, particularly for women who have historically been excluded from these formal systems. And I also want to cite in this idea one data that reflected in the report, the alarming low rate of women with access to banking services. According to the report, only 12%, which highlights a critical gap in achieving gender equality and economic inclusion. And in this regard, and I also do some work on other realms of rights of women, I believe that economic autonomy is essential for empowering women, as it provides them with the tools to make independent financial decisions, invest in their future, support their families, as the report indicates, but it also helps women break cycles of poverty and break cycles often of gender-based violence, because by working on their financial autonomy, on their economic autonomy, we're also impacting their dependence on abusive partners, for example. And this dependence is a key barrier preventing many women from living violent relationships. So just to give some ideas on the issue of policies, it was also super interesting in the report to see how it's illustrated the power of behavior and psychology in driving change. For those of you who haven't taken a look, the report shows very interesting that evoking gratitude during financial advising sessions increases the likelihood of opening a savings account by 30%. No, I thought that was super interesting, which is a simple act of human connection, showing us that empowerment is not just about resources or taking a class on financial education. It's also about building trust, inspiring confidence, and nurturing hope in these women that we need to keep addressing. And finally, and with this I close, how crucial it is to have interventions that are scalable, sustainable, but also where all actors are collaborating. No, collaboration is key. And here I'm talking about the importance of the government leading policies on the subject, but including also NGOs, financial institutions, intergovernmental organizations, the private sector, who must work hand in hand to create ecosystems that support these women at the different stages that they are in their financial journey. So with that, dear Manuel, I thank you again for the opportunity to comment the report, and I look forward to the discussion that we're going to have now. Thank you so much.
Thank you very much, Mileydi, and thank you very much, Betilde. Definitely lots to talk about. I think, one of the things we learned on this work on remittances and financial inclusion is that nothing is static. There is a lot of dynamism, a lot of change that goes along throughout time. One of them is precisely that while we talked about financial inclusion 20 years ago, at that time we were trying to figure out ways to lower the cost of transactions, but also to enable remittance recipients in general to own a bank account. Today, 20 years later, this is not just a baseline. There are other changes that have come across, and one of them is the digital ecosystem. Owning a mobile device, understanding it, but also being able to use it for different applications. One of them is payments and holding money in the digital device, whether it is through a banking account or through a fintech. And I wanted you to give us some feedback as to what you think will be programmatic elements to address some of these. You mentioned, Betilde, systemic support that can be introduced to enhance digital finance, especially for women, because in Guatemala, we did some work on introducing digital financial instruments. We also did it in Nicaragua during the pandemic. And we learned basically that when people formalize their money through a digital application, digital financial application, a wallet, their disposable income increases 10%. That is, it's not just the fact that if you don't have access to this financial ecosystem, you are somewhat lagging behind, unable to perform certain transactions. But it's also that you are not able to accrue more value into your money. So this is where, programmatically, I think it's something we could think about. And so I don't know if Mileydi, Betilde, you want to address that before we go into some questions we have from the audience.
Well, I can weigh in on this, and thank you for the question. on the programmatic side, on how do you operationalize this, right, to make it transformative, I think for us, one of the lessons that we've learned and we've tried to capitalize on is the private sector piece, which Betilde alluded to this. In one of the projects that I mentioned, the Digital Financial Inclusion Project, it's been really interesting to partner not just with MasterCard, talking about reducing the cost too that those that are receiving the remittances can reduce the cost. Partnering with MasterCard and CARE, which committed significant amount to this effort, close to $4 million. The project in particular works with women-led micro and small-scale enterprises to improve their digital financial skills. So this particular addresses the gender barriers that disproportionately, again, limits women's access to financial services. So on the operational side, just to emphasize that the private sector piece for us has really given us an opportunity to leverage our own funds, but the ability to reach more and also make it more impactful on the receiving end too.
Just to complement on Mileydi's response and to your question, Manuel, I was, as you were explaining and, maybe looking at the very technical elements of the digital divide and the different tools that there may be available for women, I just kept thinking that two things that we've learned from working in the field, on the ground, on these issues have to do with first, and I would say that this would be an idea to move away from standardized programs for financial education and try to make them culturally and ethnically relevant. And as said it a couple of times in my remarks, meeting women where they are, but looking at them not just as women, but women from rural areas, indigenous, and with many other elements to their identity that is very, very important to have in mind when designing these types of programs and maybe offering them the tools that may be useful to them. And then the second element, and I think this is something that I am committed to working, whether in these types of conversations in my professional life, but also on a very personal level, that I believe that the real key is perhaps adding to those financial literacy programs elements or trainings and opportunities for women's leadership, strengthening, and empowerment. Because if we also, add to these financial literacy programs the element of women's empowerment, I think there's going to be a greater awareness of their rights, of their opportunities, and I think it's going to have much more of an impact, whatever we do in the financial realm.
Thank you. No, I agree. And I agree, Mileydi. We have been working in partnership with different financial institutions, with credit unions, with banks, both private sector banks, Ban Rural too, and including fintechs. And in our experience, the participation of the private sector is vital. It's vital not only because there is a risk-sharing mechanism. They all participate in investing in the issue of financial inclusion, but also as a revenue opportunity. But there is a know-how that is transferred, and that has been very important because, for example, when we started working on these issues, the typical response from the banking sector in particular, and sometimes from credit unions, was when we talked about financial advice, financial literacy, they say, sí, tenemos un programa en la web. And it's like, no one have access to the portals. And again, this comes back to the issue of digital finance and digital literacy. We learned, for example, that yes, there is a low percentage of women who own mobile devices, but more problematically is that those who own the device are not fully digitally literate. When we talk to people after we provide the advice, if they want to us to follow up with them through the digital device, more than half of people say no because they just don't understand it. They just are familiar with using WhatsApp and to making phone calls. And so the potential of it depends on some intervening support, like the one that Betilde was talking about. So with that, we have a couple of questions from the audience. One, and maybe Mileydi, you alluded to this to some extent, says, how is the government of Guatemala strategizing or will maximize on the flow of remittances? We have a much more complex question that I did this exercise 20 years ago. I haven't done it before, but I'm just going to read it. How much of the remittances remain in Guatemala versus how much is used to purchase goods and imported food? It's a good question because imports do have an effect also on economic productivity in Guatemala or in any other country. And then another question we have, alternatives to traditional banks to hold their savings, and that includes mobile wallets, but also another alternative has been the credit union system, and I think USAID has been providing some support along those lines. So I'm going to leave those questions for now. We have a few more.
Yeah, so thanks for the questions. I'll tackle the first one, which I think in the 1 year, well, close to a year of the Arevalo administration, since the very beginning, Administrator Power was the lead of for the inauguration, and one of her first meetings was actually with the Ministry of Labor to discuss specifically, an array of issues, but there was an interest from the very beginning on the H-2 visa programs. And I think that's where we've really tried to capitalize, because I do see it as a win-win, right? There's a lot of negative ramifications of irregular migration, right? And I think one way to tackle this issue has been to invest more in ensuring that people have opportunities. No one wants to leave, their home and really creating separations that go beyond, a short period of time. I mean, like children that are left behind and so forth. So in any event, I think for us, we found a real partner in the government in ensuring that we do more on the H-2 visa program. And that's why we've seen the results that we have, specifically in the Western Highlands. So when you look at our development investments in Guatemala, a big percentage of that is invested in the Western Highlands. So that's why we thought from the very beginning, let's look at win-win scenarios that could ensure that people are returning home, investing, and we've seen real impacts there. So that's one of the areas that I would like to highlight, and how we at USAID have found a real partner in the government of Guatemala in this effort.
Yeah.
Thank you.
On the how much of the remittances stay in Guatemala or alternatives to traditional banking, we have the expert here, our dear Manolo, who can address those questions. But I wanted to take the first one too, because part of our day-to-day work at the Organization of American States is working with governments and with this new government in Guatemala. And what we've seen is a very good disposition to make the best out of the opportunities that they have in a very challenging environment in the country. And two very concrete examples on how I think that they are looking at migration, labor migration, remittances, the gender perspective in how they're addressing these issues. Have to do with one that as we speak, colleagues of my team are in Guatemala this week, working with the government, the development ministry and other relevant organizations to revamp their social policy on disability with a gender perspective. And of course, the issue of migration is part of the conversation on those during the mission that my colleagues are undertaking. So there is an interest on reviewing whatever they've done in the past and seeing how they can do it better. And I think this is very positive, illustrates the interest of the new government of Guatemala to maximize any opportunity, including remittances, of course. And the second way to illustrate this I'm saying is there, and for those of you listening, the OAS has recently been appointed technical secretariat of the Los Angeles Declaration on Migration and Protection Process, the LA Declaration, which is an initiative that is entering a new moment now with the establishment of this secretariat that the OAS has with PADF, and with Colombia now taking over the leadership of the process. I just mentioned this as a way of context, but another illustration is the active participation of the Guatemalan officials, special coordinators of this process, and in ensuring that the discussions on labor mobility pathways, on the financing of opportunities like these ones at the regional level that can also benefit Guatemala are very high in their agenda. They're very active, and they're always trying to find opportunities to ensure that the best interest of their people is preserved, is protected. So,
Thank you. I think definitely guest worker programs do have an impact in the amount sent, and also in remittance behavior itself. People tend to increase their savings and invest in some other opportunities. And this is one of the lessons we have learned, is that savings formalizations increases the intention to migrate irregularly. And so this type of initiatives do play together on issues of economic development. We have a question that it's to some extent on the report, but you two have addressed it broadly. And the question is, to what extent does the report addresses informality as one of the main barriers to financial inclusion, and the strategic support of the government of Guatemala to simplify registration and services to businesses? And I think the root causes strategy looks at economic opportunities, which basically dovetail with informality. And you also, Betilde, have talked a little bit about this issue. In our experience, financial access among people in the informal economy is much lower. It also has an effect on the intention to migrate. So it's definitely one key development target that we need to address. So I'm happy to hear your thoughts, your ideas on this issue.
No, I mean, I think you've hit the nail on the head. I don't know if I have anything more articulate to say than it is one of the hurdles, right? I think lack of trust sometimes in institutions, right? And this is where you get at the governance piece. That's why it's important that people perceive that institutions are, trusted, that their money will be saved, whatever little earnings or not that they have, to create that confidence. So I think the informal market, and people working with the very little means they have to ensure that there's a safe, place that will actually work in their benefit should they use to be, to open a savings account, right? How they can have access to markets. So it's really an educational and changing the paradigm in many ways. But yeah, I don't have anything more to add on that.
Thank you.
Yes. Just to a reflection that this is not just an issue in Guatemala, this is a Latin American issue. CEPAL data, or ¿cómo se dice? ECLAC data, has confirmed that around 50 or more than 50%, 50-some% of the economy, the informal economy, is composed by women and actually migrants too in many countries. So women and migrants are the majority in the informal sector. And this creates huge vulnerabilities for them, as I was saying in my remarks, not just in terms of the inconsistent income, right, and how this makes them vulnerable to shocks and pronounced poverty, but the whole dimension of not having social protection, no access to health and many other essential rights. We see them at the OAS as rights that unfortunately women are not able to benefit from because they're so overrepresented in the informal economy. And here the idea is to keep thinking of strategies and tools, financial tools that can be helpful to them and really structure how the element of women entrepreneurs, because it's usually women, I don't know, making food in their homes and then going out to sell them in the streets, or becoming merchants of certain goods that they purchase in bulk and then go out and sell them in the streets. That's very different from an actual formal emprendimiento, ¿no? Entrepreneurship endeavor. So, I believe there's much more to be done on how to structure this entrepreneurship for women and create conditions so that they can have consistent income, which is essential for them to not be vulnerable to food insecurity for them and their families and falling into poverty, and ensuring that they have basic protections, social protections where they are.
Thank you. Yes, and I think just to add a little bit, at least in Guatemala, because this is a moving target depending on which country you're working on, whether it's El Salvador, Guatemala, Honduras, or Colombia, because you mentioned, the entrepreneurial activity in the informal economy of migrants. Venezuelans working in Colombia are largely informal. In average, for most of Latin America and the Caribbean, is 65% of the labor force that is in the informal economy. And in Central America, it's over 70%, between 70 and 80%. So basically, almost everyone works in the informal economy. And the experience is, at least with the case of Guatemala, is that the problem is not registration. It used to be a problem. The cost of registering a business was onerous because using a notary itself will cost you $600 to $1,000 to register. That's basically 1.5 months of income. But right now, the tax authority has simplified the registration process as an individual or as a business. The challenge is more about the solutions that you can provide to this sector that needs to be more competitive. Most people working in the informal economy work in saturated markets, as Betilde mentioned, selling stuff, making food at home, etc. And that requires a little bit of technical support, providing with business coaching, for example, to improve their competitive abilities. And that includes also providing them with technology tools to be more competitive. For example, payment solutions in the digital landscape. Many businesses, kioscos, pulperias, tiendas in Guatemala are still not connected to the financial ecosystem, much less into the digital ecosystem. So a POS, a point of sale terminal, is not accessible in many parts of Guatemala. You still take cash. Some of it is because there is not internet access. But the main issue continues to be access to financing. I mean, as I show you, 70% of credit in Guatemala stays in the Department of Guatemala. And 5% of credit of all the credit portfolio goes to micro enterprises. So, it's un embudo. that by itself limits financial access. And that's one of the main challenges of financial inclusion. So if you live outside of Guatemala City, outside of the Department of Guatemala, even if you live in Chela or in other places, you're still constrained with accessing financial tools, even if you have savings at hand and you want to deposit it. So the issues are much more complex, holistic in a sense, and they do require some policy intervention on the side of the Guatemalan government. We have 1 or 2 minutes left. I don't know if Betilde and Mileydi want to give some concluding thoughts or recommendations, next steps, next year advice.
I will not speculate next year. But I do just, want to thank you again. Manuel and Betilde mentioned this in her remarks. You have really been quite a force behind this area of work for many of us, not just throughout government, but organizations in country. And I think to have you as a champion has really been an honor. I think it has educated a lot of us too. In government, when you're formulating projects and trying to be as responsive as possible in a timeline that makes sense. Las estrellas no siempre se alinean, pero hemos encontrado un aliado en ti. I think there's more work to be done in this space. I think the foundation that we've built through the programs that we currently have and what we've done, particularly in the last 4 years, I hope serves as a platform really for the incoming administration. So USAID could continue to be a partner in country and really support the people that need it most. So thank you again for your contribution and intellectual capacity that you've let us benefit from. And Betilde, thank you for your inputs and remarks as well.
Thank you, Mileydi. No, just in conclusion to maybe highlight what has been a common denominator in the conversation, which is the importance of financial inclusion and access to banking, but going beyond it, and about the importance of creating systems that empower women, that give them knowledge of their rights, give them knowledge of the opportunities and tools that they have available, and meeting them where they are. And doing all of this as a way to break the cycle of exclusion, which we know is so relevant in Guatemala, but really for the whole region. And finally, just celebrate the report that is being launched today and recognize the Inter-American Dialogue's role in providing this type of very important research to help in policy design and policy implementation, but more importantly, to guide intentional actions on the part of governments and all other actors in this realm. So thank you very much.
Well, thank you both of you. It's been great having you in this conversation. We look forward to continuing this conversation in different forums, and thank you all of the audience for participating. We had a good participation of people. We have over 10 questions that were raised, and we look forward to continuing next year on new challenges. Thank you very much.
Great. Thank you so much.
Bye.